Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, I'm joined by the economist Stephen Koukoulas. You'll find him at thekook.com and on X using the handle the Kook. Stephen, good morning.
Good morning, Sean.
I got a bone to pick with you. I mean, we've got so much to talk about, politics, economics, but let's start with the Melbourne Cup. That was a dud tip.
The shock, it came second last. So it didn't even come last to get your money back like some sweeps have. So the map, I still think he's coming around the home turn, but I didn't get the 100-1 shot. I wish I did. I didn't. And the map, well, there's always next year.
Always next year. Okay, we've got a little bit to talk about for this week, but wow. What a week last week was the Reserve Bank would have been big enough, but that US election swamped everything.
It did. And the knee-jerk reaction that we've seen, in a day or two after it was confirmed that Trump has won the election, he's probably got a good result in Congress too, has been that sharp jump in stock prices, although it's uncertain whether that's going to be sustained or not. Yields, bond yields and interest rate markets have sold off, so we've got much higher yield settings because he's giving big tax cuts and tariffs, which will be inflationary if he's true to his word, and that's certainly an important qualifier. But really, it was a stunning result, one that shocked the markets. And, when you get the Dow rising, 1,500 points in one session, it's telling you something about what the market's expectations are. And again, of course, whether it's sustained is the $64 million question.
Yeah, okay. What about the Reserve Bank board meeting last week? We sort of forget about that, but that was pretty important too.
Very important, and it was one of those ones where I don't think there was any surprise. And when Governor Bullock gave her press conference afterwards, she was asked directly, did you consider hiking rates or cutting rates? And she said, no, look, we didn't really. We just knew that they were going to be on hold. And they sort of war gamed scenarios. That's my words, not necessarily hers. But they were really just talking about, what are they seeing in the economy? What's happening globally? We've had rate cuts occurring, including last week, around much of the world. So you've got this scenario where the RBA is still worried about the trimmed mean or the underlying inflation pressures, even though she did acknowledge that the headline fall in inflation was a welcome development. But they want to get those, what do we call it, the demand-driven, the excess demand that she still thinks, and the RBA board still think are in the economy, before they're willing to contemplate a rate cut. That said, they said they're willing to be pragmatic if and when the numbers change, they'll change as well. So not much of this forward guidance. I think the RBA has been burnt by that in the past, and it's a lot more, they have their forecasts, of course they do. They're a lot more reactive to the news that comes through.
What about, if you put those two things together, the US election and the Reserve Bank thinking about interest rates, I presume it's at the margins, it's not sort of central case, but still the idea that US rates are going to be higher for longer on the back of bigger deficits. Does that play into the Reserve Bank, do you think?
Look, it does. And in fact, the governor, Michelle Bullock, she appeared before, I can't remember, it was the Senate or House of Reps committee hearing late last week too, which didn't get a lot of coverage because I think she just really reiterated what she said in the quarterly statement and in her Q&A after the board meeting. But she did say, look, it does have an impact. The US economy, the dominant economy in the world, particularly in terms of capital markets, it's got a probable, and again, she was hedging her words very carefully, which is exactly as she should, but a probable inflation spike looming if the new president or president-elect is true to his word on income tax cuts and company tax cuts and tariffs, that'll play into sort of global trade, obviously, through the tariff side of the economy. And it could just mean the US is stronger for longer, rates higher for longer, those sorts of cliches that we can use. And if the US has got a high inflation, high interest rate, high government debt scenario, which is highly probable, given the election result, then that will feed into the RBA's deliberations to some extent anyway.
Okay, this week, all about labour, really, in terms of wages and unemployment.
Yep, labour force data in broad terms. So the wage price index first, which is really interesting because we had, up until probably 6 months ago, a concern that the tightness in the labour market, that the unemployment rate being very low, could feed into wage pressures increasing. Now, the market's expecting wage pressures to abate a little. So we've got the forecast for the quarter-on-quarter increase in the wage price index of about 0.9% for the quarter, which would bring the annual figure down to around about 3.8%. So it did peak at 4.2% about a year ago. So again, it's not free falling. It's not a massive deceleration in wages growth, but that feed that was there on high wages feeding to higher inflation probably is going to be thrown out the window with that wages number. And importantly, the one that we've all been shocked about every single month for the last 6 months, the labour force release. Look, I think everyone's expecting a slowing in the rate of job increase. So around about 20, 25,000 increase in jobs, down from the 40, 50, 60,000. And everyone's still expecting the unemployment rate to tick up to 4.2%. But as I said, for the last 6 months, I think it's been the labour force numbers have surprised on the upside, on the strong side. So, but we'll watch out to see just whether there's any signal occurring from a softening in the labour market.
Stephen, enjoy your week.
Thank you, Sean.
That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on X using the handle The Kook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.